Tesla, so obviously while I was gone, Tesla stock had some troubles, right? I think it's pretty clear. Now, I think I was down on my Tesla hedge before I went on the vacation, I believe. And now, obviously, we're in the green 22% on this Tesla hedge. These are put options that expire on Tesla September 20th, 2024. There's a hedge in case the market got really weak at some point during the next several months, or Tesla stock in general. Obviously, Tesla's my second biggest investment in the public account. If that one got really weak, it's a hedge to kind of save some face, make some profits on that, and maybe plug that money back into Tesla shares or another stock in general, right? And so Tesla's, let's just call it struggling. I mean, just the last trading day there on Friday, it was down 3.67%, down nearly $14,000. If it wasn't for Tesla being weak during that vacation, I mean, who knows, the public account might have been up $60,000 or $70,000, something like that, right? Now, there's a lot of reasons for this, okay? There's a lot to go through in regards to this whole situation, and I mean, it's a lot. Tesla traded lower on Friday after cutting the price of its vehicles made in Shanghai by up to 6%. The Austin-based company announced that the price of the entry-level edition of the Model 3 will be reduced from about $36,800 to, let's just call it a lower amount, 6% lower than that. Meanwhile, the Model Y was moved to 258,000 yuan from 266,000 yuan. So, I looked at this and I said, the bad news with this is, if we want to take it from the bad angle, right? It means margins are going to move down more. That's just the bottom line. It means margins still have not quite troughed. I think everybody's kind of waiting for, when do Tesla margins trough? Because we know it's coming. It's likely coming in the next couple quarters, but to predict the exact timing of trough margins for Tesla, and then we start moving back up again, it's difficult, right? Is it Q1? Is it Q2? Is it Q3? Is it Q4? Bears will say it's, way out there. We haven't even come close to that. Bulls will say we're very, very close in this situation. So I'm leaning toward we're closer rather than far away. I think we probably trough margins in the next 1 to 2 quarters. That's my personal opinion. But the bottom line is, right now we have not troughed. You will see margins likely go lower for the quarter they're about to report here in just a bit, and then you'll likely see margins move downward again, unfortunately, the following quarter. Then I think the question mark is, could we have margins start to move back up? But, it's not a comforting position when you see margins going down and down and down and down and down. That's the situation. So that's kind of the bearish take on that, right? On the bullish side, you can look at this from another angle. Analysts are basically thinking that the price drops could work out in Tesla's advantage longer term, because there's a lot of EV players that are struggling to even make any profits. And by Tesla lowering price even more, it makes the market in China even more competitive, which obviously hurts the weaker players substantially. They're either going to have to get out of the business, or, they're going to potentially go bankrupt for some of the weaker players. That's the bottom line in regards to that, and many of those companies are losing a fortune. Tesla has the capital structure. They have the margin still, even at this point in time, to put pressure on these guys, and at the end of the day, take market share and potentially hurt these other companies in a substantial way if they want to play that game, right? Tesla apparently hopes to maintain its market share in a highly competitive market, said this analyst. Chinese homegrown rivals have launched a raft of new intelligent electric cars to mount a challenge to the U.S. EV builder. China is the most competitive market by a mile when it comes to EVs, but it's also the giant market it is, right? In China, it's like you go to buy an EV. Like, you're going to buy a new car in China, you're going to buy a new EV. You're not going to buy an internal combustion engine vehicle. People are going to buy EVs in that market, whereas the United States is very different. Most people, the far majority in the United States, if you go to buy a new vehicle, you're still buying an internal combustion engine. That's the bottom line with that, right? It's a very different situation now at this point in time in 2024 in China versus the United States, right? Investors may also be reacting, like I said, we got a lot to go through just in regards to Tesla, never mind other stocks. Investors may also be reacting to the temporary production halt in Gigafactory in Berlin due to the Red Sea shipping disruptions. The armed conflicts in the Red Sea are associated shifts in transport routes between Europe and Asia via the Cape of Good Hope are also having an impact on production in the Gigafactory Berlin. Basically, transportation times are being messed up, and that's one of those things. I can't tell you how that's going to end. No one can. No one watching this video right now, no one in Tesla can tell you how this is going to go. So this is just a scary thing. We don't know. We don't know what's going to happen with this Red Sea situation. No one has a clue. It's out there and it's scary. And because it's out there and it's scary and it could disrupt Tesla's, obviously, European, production, it causes fear in the market, right? And it's understandable. And so some people freak out and they say, I don't want to hold Tesla right now. I don't want to hold Tesla stock right now with something that is completely out of Tesla's control. This is completely out of Tesla's control. There's nothing they can do to fix the situation in the short term. Bottom line with that, right? Now, on the flip side, you have ARK Invest. They bought the dip in regards to Tesla stock, right? I don't put too much faith in that because I've seen ARK buy and sell the stock. They almost seem like day traders sometimes in regards to stock, dumping out of it, then dumping in it. 1 minute it's their biggest position, next minute it's way down, and a lot of times it's because they dump a bunch of shares. Now, short bets on the stock are all the way at a very low level of 3%. So Tesla's not a highly shorted stock right now, which should give, I think, a lot of folks some comfort because even short sellers understand that Tesla's likely close to troughing margins. We might not be there yet, but we're close. And the bottom line is when investors are confident Tesla's finally troughed margins, you're going to see likely an epic move up in the stock. And when I say epic, I'm talking about a 30 to 50% rise in a matter of a few months. Yes, 30 to 50% in a matter of a few months. But that is when we are actually confident margins have troughed. We aren't quite at that point yet, okay? Like I said, the debate is whether it's a quarter from now or 4 quarters from now, but it's likely at some point in the next year, right? Now, you have other people that are very bullish. I saw this out there. Tesla's AWS is its mega pack business. I don't really have a strong opinion on this. I could see people looking at it like that. Maybe it is. Maybe it's not. I don't know. We'll see. This is another negative headline that kind of gets into the whole Tesla story right now. Hertz is selling off a third of their electric vehicle fleet. There's a thought process in the market right now that no one wants EVs. Tesla has no demand. There's these sorts of thoughts being thrown out there, even though I believe they're false. They're thoughts that are thrown out there right now, right? And at the end of the day, I think the EV market in the U.S. is not in a great place, but it's because a lot of companies aren't releasing compelling products. I think the only 2 companies releasing compelling products at compelling prices in the EV market are Tesla, obviously, and Rivian. And outside of that, man, the traditional players, just as I predicted 5 to 7 years ago, they're going to have so much trouble. And now people are finally starting to see these companies are having a lot of trouble. I was predicting this years ago this would happen. People thought, these Wall Streeters would come on here and be like, oh, the competition's coming, Volkswagen's coming, Ford's coming, GM's coming. And I'm like, I don't think they understand. This is a whole different change. If you look at the smartphone industry, which is a way easier product than EVs, and you're talking about switching from internal combustion engines to electric vehicles, and you're talking about having the cars drive themselves and all these sorts of things, like this is way bigger changes than going from, feature phones to smartphones. Who became the biggest players in the smartphone industry? It wasn't the old dogs who were the big popular players before. It wasn't the BlackBerries. It wasn't the Nokias. So the fact that people assumed VW and Ford and all these players, they've come out with their products. No one wants them. No one wants them. And so, that's where the EV market's at. And I think this cloud about negativity around EVs and people don't want them and these sorts of things, it's real clear. People do want EVs, but you got to put a compelling product at a compelling price, right? Lucid might have some compelling products, but they're not at compelling prices. You got to have the price and the product. And Tesla's the only one that's done it at mass scale, and I think Rivian's flirting with getting there at some point in time, right? Now, on top of that, you have headlines like this. Even a friend had sent me this I think it was a day ago or 2 days ago. China's BYD, electric vehicles leaving Tesla standing still, right? And about BYD overtaking Tesla. And I mean, it's just, here's the deal, okay? When we were at the beach, we couldn't actually go in the ocean because they had it red flagged and the water was too rough. It was actually really rough, the water, right? Which I didn't care about because I was going in the pool and the rivers and all the other stuff. But this is what Tesla's in right now. Tesla's in a red flag situation. The waters are rough and you're just being hit with a gauntlet of headlines. This is not the first time this rodeo has happened. It won't be the last time. I can tell you in my many years of being invested in the stock, which, gosh, how long have I been invested in the stock now? 5 years or so. I've been invested in Tesla stock, maybe 6 years, 5, 6 years. I've been through the storm so many times. And this is just another one. It's a gauntlet of negativity and this thing, that thing, this thing. And it's just like, geez, can we get some positivity, some positive headlines? And you just can't. And so this is what's going on right now. It will end eventually. And then it will be bright days again. And then next thing you know, it will be a gauntlet of positivity. And then everybody and their grandma will want to own Tesla stock again. And it goes through these cycles, man. It goes through these cycles. At the end of the day, look at Tesla's progress over the years in production, in deliveries, in revenue. I mean, they put up the numbers. They come through with the company fundamentals. The story around Tesla is all over the dang place. This isn't the first time. It isn't the last time. I can tell you that. There'll be plenty more of these times. All right, guys, let's get into this.
Joining us now is Tom Lee and MUFG Head of Macro Strategy, George Goncalves. Guys, happy Friday. Good to see you. Tom, the Russell 2000 was lower today, and in tech, even stability seemed to be in favor. Microsoft was higher, Meta doing nicely, IBM, Oracle. What does this week sort of ex-Bitcoin, we'll get to that eventually, what's the meaning of it for what you expect in January?
Well, we're 2 weeks into the year, and this week certainly feels defensive. I think investors are still debating whether or not this is going to be a market where the Fed is supportive. I mean, we had some comments where we've got some inflation reports, some confusion, and some uncertainty about whether the Fed is going to be sort of supportive market making cuts. I think January is kind of a microcosm of what the year is going to be like. I think it's going to be a very challenging year for investors, but and our call has been that you make most of the money in the second half. So I think this is what January is reminding us of, that we're going to be a little anxious about the Fed in the first half.
And George, what's fixed income doing right now? I mean, valuations, as you point out in your notes, are kind of tied to that quite a bit.
Absolutely. I mean, the bond market's not confused. It's made up its mind that the Fed's going to cut rates. We had the 2-year note basically move almost a quarter of a point, 25 basis points nearly this week, and the curve is starting to disinvert. So we're having short-term rates moving faster than long-term rates. Even some long-term rates are going higher slightly. But by and large, this has been a week where the curve is re-steepened. Rates are lower. They've been low all throughout this whole period. And yet, we had some mixed news on inflation. But by and large, I think the bond market's made up its mind that the Fed's going to cut pretty aggressively.
And Tom, when you look at this week's data, particularly inflation data, CPI, you don't read it as being hot the way some others do. And maybe the PPI data that we got today supports that, right?
Yes, that's right, John. Core CPI, which was reported yesterday, came in at 0.3, and I think a lot of folks kind of zeroed in on the super core number coming in at 0.4. And what we pointed out was auto insurance is over half of that rise. So if you took out auto insurance out of core and super core, you'd be close to 0.2, which is, basically at Fed's target. Auto insurance rates are rising because of loss severities over the last 2 years. It has nothing to do with the Fed keeping interest rates here.
Now, what would a bear say about this? A bear in the market would say, oh, that's ridiculous. Well, you can't take auto insurance out. So to say, take auto insurance out, it's half the problem, blah, 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 unrealistic. Well, bears do the same exact thing, just to be honest with you guys. Bears do the same thing, and they'll be like, oh, well, gas prices happen to come down. So, if you take out that, or this price happen to come down. So if you take out this, bears do the same exact thing. So at the end of the day, the numbers are the numbers. The bottom line is, you can either month-to-month move around. Is inflation coming down, or is it getting worse or getting better? It's getting better. There's no debating that. Go back to where we were a year ago. Go back to where we were 2 years ago. Look at where we're at now. It's clearly getting better. It's clearly going to continue to get better until we have the next super cycle in commodities. And maybe that's at some point this year. Maybe it's in future years. It's going to happen someday. But for now, we're doing just fine as long as commodities stay in a relatively cooler place.
Won't benefit from the Fed keeping rates here. It's really because car prices surged and auto insurers have to make their money back. So I think it's almost a statistical residual inflation number, but it's not really predictive.
But George, what would it take for the Fed to actually message that way? It seems like they just got off of the position of trying to convince people that they still might raise rates, so they're still hesitant to indicate any readable inclination to cut.
Look, they pivoted pretty quickly in December. We have a March cut as the first cut we've had since July of last year. Our view has been that the U.S. cannot afford high rates, and they're very restrictive. Let's be honest, 5.5% is very high in the U.S. They got to take rates down into the threes, and they have to start soon. So it's going to be the setup. Is it going to be a macro force, or is it going to be a combination of a macro force along with some sort of financial turbulence? If it's purely macro, the data has to really decelerate even further than what we got this week. And it could happen that way. In February, January data comes out in February and so forth. This Q1 data can be very weak, give the Fed the excuse to start the cutting process, and then watch and see how the economy reacts to it. So we're of the view that it come by February, there's a lot of revisions in the data, that it might actually revise down a lot concerning the birth death model of the NFP data. Inflation comes in lower. They have all the information there that they'll need to cut in March.
Okay. And now let's talk about Bitcoin. Tom Lee, we got the approval of the spot Bitcoin ETFs this week. Big up day on the first day, down today. I think for the week, about even. Is this ETF party that's now begun going to significantly change the way Bitcoin trades from here?
It is only 2 days in, John, so to me, I think it's going to make a huge difference because instead of having to go to an exchange and then worry about your private keys, many investors can now use traditional financial markets to access Bitcoin. There's $150 trillion of household net worth just in the U.S. Allocating just 1% into crypto would be $1.5 trillion of inflows. That's already more than Bitcoin's network value. So I think there's tremendous potential, and I think it's a really important diversification for a lot of folks that have exposure to U.S. dollar assets and equities or bonds. And, Bitcoin is really a good hedge against a lot of monetary risks.
Yeah, so my opinion on Bitcoin price, short-term versus long-term, and the whole ETF and whatnot, my view was, and we'll see Bitcoin price in just a minute, but my view was great news for Bitcoin long-term, these ETFs going through. But I actually thought in the short term it could actually hurt Bitcoin. And the reason being is there's a famous saying in the stock market. It goes something along the lines of buy the rumor, sell the news. And so, the rumor has been we're getting these Bitcoin ETFs. Everybody piles into Bitcoins, a lot of excitement. You see a huge price movement up. And then when it actually happens, the price can actually falter in that sort of situation. So